All right, joining me now, Huntington Commercial Bank Chief Economist Ian Wyatt and Jared Bernstein, former Council of Economic Advisors Chair under President Joe Biden. Jared, I'm going to start with you. He wanted a family fight. He seems to have got one, even though when he was asked about it, he tried to kind of be a little bit more demure. No, this is about conversations. This is about policy. But again, he did get 3 dissents, a change for him. Your reaction?
Well, the 3 dissenters are clearly worried about those 63 months you just took us through. And if you're a Fed that's truly committed to get inflation back down to target, and you've been missing the target for 5 years plus, you can understand where the dissenters are coming from. The challenge is that the Fed really can't do much at all about the supply side pressures, whether it's inflation from the war in Iran or whether it's inflation from tariffs. By the way, the other piece is, as you were just saying, on the demand side from AI, but hiking rates a quarter of a point isn't going to do much in that regard. The only reason to go there is because you really want to convince people that you mean what you say. And if Chairman Warsh has a problem, it's that last point. He continues to be adamant about getting back to target, and I don't think he convinced a lot of people about why then he's okay with this pause. So a little bit of cognitive dissonance there from the presser. I
agree with you, Wyatt, because, excuse me, Jared, but I want to bring Wyatt into the conversation because that's the same kind of tone that I heard from him. He kept saying 2% is the target. He was very clear about that. At the same time, he's not on board with hiking rates right now. The market, and the other thing he said I thought was interesting, he said, look, he goes, watch the ball, not the referee. He was very, very careful to not give, no more forward guidance. He didn't want to give any hints. But the market has been telling him, I think, that a rate hike is coming. And that was the bet going into this. I think it was about a 38% chance, Wyatt.
Yeah, I mean, certainly the market has been pricing this in. We've been surprised by actually how strong that got, because if I look at the data from the last meeting to today, there was nothing in that data that said things had gotten worse. In fact, it was quite the opposite. If we look at the CPI data, month on month was flat, PPI was down, jobs data was softer. We had a lot of data points that were pointing to that, there was no real reason to move today. But he also did point out, he said in this press conference that the CPI, the most recent CPI print didn't mean much. And he was talking about longer term. And I think he was really hinting at, if you get a couple more months that look like the prior 3 months, then maybe September really is in play. And I think that was sort of the hint coming in there.
It was. And Ian, I'm so sorry, Ian Wyatt. I don't know why I was calling you Wyatt. I decided to rename you in the program today. But, yeah, Jared, but here's the thing. What I thought was so interesting is he's asked about his comments coming up in Jackson Hole, and he said that productivity is certainly something he's going to be watching. But he made a lot of bullish commentary about the economy in general. Then he was asked, are you still looking at, say, core CPI? Is this PCE price index report, is that data still important to you? And he said, not necessarily. The PCE price index, which we're actually going to get this week, we're going to get it tomorrow morning, that's always been what Fed watchers have said is the key point for the committee. He is giving us a sense he wants to back away from that. What did you make of that, how they analyze the data? He's changing, I think, how he wants to see the Fed operate.
Well, we know that he's very interested in getting other data sources, but I just can't believe that anybody in that building isn't going to look really carefully at the PCE, the CPI, and all the other regular indicators that we're used to. What I think Chair Warsh is underscoring there, and I very much agree with him, is that we have a tendency to overweight 1 month of high-frequency data, and that's a big mistake. You really have to pull out the trend. By the way, that's one reason why core is more informative than overall, because it gives you a better sense of where inflation is headed. But the notion that we're sort of throwing out all the old indicators and waiting for something spanking new to come out of these task force, I guarantee you that's wrong. And I guarantee you that the PCE will be watched as closely as ever. They'll just downweight some of the noisy parts, and that's well advised.
I want to ask you about that because he was asked about the 5 task forces. This communications, it's inflation framework, asset holdings. I mean, and he talked about that I have confidence in the people that I have picked for these task forces. Now, look, there's a Nobel laureate among the names, some former central bankers, business executives, specifically, though, Mark Andreessen. That name come up. What did you make about that? Because you and I were watching this on set. Kind of a little eye-raising that Mark's name came up, Ian.
Yeah, I mean, it's certainly an interesting bunch they have for these different committees. I think you have someone from Microsoft on that committee as well. And obviously the critique is, hey, this is just the industry is going to be promoting themselves. And the real challenge with AI we're seeing is right now, there's some inflationary aspects coming with it on the construction side. I mean, it's absorbing so much construction labor. $800 billion in spend this year, we estimate. That probably puts it, this is 3/4 of the Pentagon's budget for anyone playing at home. And think about, what does that mean, when you see defense jobs everywhere? This is the scale of AI right now is absolutely massive. And so it is showing up in a lot of places in the economy. And somewhat like other booms before, where there's probably big productivity gains coming from it, I'm just not sure we've figured out those applications yet.
You also, you and I were closely looking at the 10-year and the 2-year. You were really focused on Treasury yields. I want you to listen to this. This is the comment coming from the Fed chair about that. Watch.
So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those. Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today.
So does it tighten without tightening? I mean, that's the yield. That's the 10-year story, right?
I mean, that certainly is. And the 10-year really plays into consumer side, whether it's homes, RVs, all sorts of products really price off of that. The 5-year, you're probably pricing auto loans off of that. And so that's always kind of the funny split. And the problem right now with the yield curve is most companies, a lot of their borrowing happens at SOFR. It happens at the overnight rate. It's that short end of the curve, which is a bit lower. But consumers generally operate in fixed. I mean, floating, the only thing that really matters for consumers is something like a credit card loan. And that has very little to do actually with the rate and has much more to do with your risk profile individually. Auto loans, homes, yeah, you've seen this push up. It's definitely a little bit of putting a little bit of a brake on the economy. And that is what he's hoping will do, I think, some of the work in terms of helping keep inflation in check.
Yeah, and Jared, I was surprised that we didn't get more questions from reporters in the room about shrinking the balance sheet, but, I wasn't there. What can we say? But what was your overall impression? Because the more I listened to him talk, the more I thought to myself, this is a tough road to hoe to not hike rates. I mean, going into this presser and this decision, we're talking a 1 in 3 chance of a September rate hike. I mean, that's what the market was saying going into this. And Kevin Warsh said today repeatedly, watch the market, don't watch me. So if I'm watching the market, I'm thinking we're going to get a hike in September.
Yeah, I agree with everything you just said. And I find the whole market thing to be a pretty circular logic problem. I think the main reason why interest rate yields have gone up is because investors want an inflation premium. That inflation premium is bigger than it used to be, is exactly as he said, because the ceasefire ended and we've seen more price pressures, June notwithstanding. And I very much agree with Warsh that you want to discount 1 month. July looks like energy is going to be a bigger problem. So if you're telling me that we have an underlying inflation problem, but yields are up because of that underlying inflation problem, so the Fed doesn't have to do much, and meanwhile, I'm a guy who keeps saying I want to get back to 2%, no question about it. He continually discounts some of the supply side excuses. It all seems kind of confusing and circular to me. So I must say, and I think many of the reporters in the room seem to manifest this as well. A lot of them were saying, help me out here, sir. I think there's a little bit more fog than I'd like to see right now.
I'm with you, Jared. That was my overall impression. And yes, I heard the reporters kind of start to get just a bit frustrated at their questions about looking for specifics. Maybe the point is he doesn't want there to be too many takeaways from his commentary. We'll see what some of his colleagues start to say when they start to come out and speak for themselves. And that's when it always gets interesting, I think. So more to watch for sure. Jared Bernstein, always great to see you. Thanks for being here. And, of course, Ian Wyatt. Thank you very much, gentlemen. Really appreciate you covering this breaking news with me.